Trading Market Technicals morning call video for Wednesday, October 16th. Markets did pull back. Dow Jones down 133, Nasdaq down 21, S&P down 12, and the Russell down 10, almost 11 points. And this is basically gibberish coming out of Congress, back and forth talk, deal, no deal, deal looks great. We're looking to settle this thing by the end of the day. We're going to continue talks at night, and sure enough, markets sold off into that uncertainty. And then Reid came out speaking around 6:30, 7 o'clock last night that he feels confident again that a deal is imminent and is on the table and ready to move on. Markets jumped up. S&P futures jumped up and now is up about 7 handles or so. But again, action means really nothing until Congress can get its act together and fulfill its agreement, and of course start paying some bills and getting everybody back to work in the government. But nonetheless, be very careful today. Tomorrow is the deadline. They talk about 12 o'clock tonight. So we'll see what happens. It's going to be very interesting today, see how the day unfolds. Did have some earnings come out of Yahoo. Intel was in line. Yahoo actually were below estimates. So we'll see what happens. Holding its own in the after hours last night. So we'll just see how this market continues to chop around. My guess, and I've been looking at, we did get a good 3 to 5% rally the last 4 days, and now we sold off yesterday. And I think that it looks to me that the markets are going to sell the news once they do come to agreement, which they will. Nothing actionable now, but I do think that the markets will sell this news, and then obviously look to buy some sort of a dip. But we'll see what happens. I don't know if that's going to be today. Might be starting in the overnight session tonight and into tomorrow. But we'll just take it one step at a time. Remember, have the idea, but let price confirm the idea. And if the markets do start to roll over, and if you want to get short at these levels, which seems to be okay, you're at the highs, then a good shorting opportunity would be in the cards. So we'll just, again, let price prove to us that we are indeed headed lower. Okay, bullish percent, SPX here on indicators. Again, not much to show you, but I will show you a couple of things. We are now kissing this 8 EMA, which is a good momentum indicator, right? We have a good moving average that kind of holds pretty true here, as you can see. Usually when they kiss the first time, it kind of sells off, as you can see, and we had this here and then roll back down again, and then we had this kiss up and then push back up here, and again we didn't get too quite there, but if you can see here, we sold off. We tried it again, sold off. So we'll see what happens. Maybe we get to push back up and then roll back down again. So right now still on a sell signal. New York Stock Exchange new highs, new lows, 52-week highs, apologize. As you can see here, as we were trending higher and making new highs, the S&P was making new highs as well. Well, now we are not making new highs. We're making lower highs in this indicator, and the S&P is at elevated levels. That's a concern to me, and that that stocks are not making new 52-week highs, and we are basically at 52-week highs right now, give or take about 20 S&P points. So this is a little bit of a concern, but we'll see how this indicator, wanted to show it to Steve. We'll see how this fares out, but we're going to need stocks to start making some highs and start really breaking out, but we're not seeing that. You know, we're seeing the indexes getting pulled around. There are some good quality stocks that are holding its own, but you can't just have a handful of stocks. You need a lot of money being piled into that sector. Now, again, I see money not leaving the market, obviously. We're still at the highs. We're rotating out of, you know, sort of like okay, mediocre stocks into more strong stocks, quality stocks here, and that's fine. And when the market does sell off, those are the stocks you want to flock back to when we do have that rally going to the end of the year. And again, nothing is true and nothing etched in stone, but keep that in mind. Okay, so we have the let me show you the tick. The tick relatively above the zero line for most of 2013. You know, you get these dips and you come back, but as you can see here, most of it we're above it. Now we're below it again, end of day tick. So let's just see how this fares. We can probably make a higher low from this low reading and then back up again. Then everything is fine. But right now we're below it. A concern. Let's just see how this fares out in the next couple of days. Okay, stocks above the 50-day moving average. We did break back above it, but now we are now testing this downtrend line, and we're making lower highs and lower lows and lower highs, as you can see here. So not good either. We need to see this get back above and stay elevated in this area, 75, 80, even 90%. So let's just see how this thing. So there's some divergence going on. There's some cracks, as you can see, but the price is holding pretty steady here, so that's a good sign. That's something that we want to continue to monitor. I'm looking for one more dip lower before the market actually starts to move higher. Now we have the McClellan oscillator, again in neutral territory, so it is further room to run down and or up, right? So we're kind of stuck in this neutral state. So the markets can run higher before it gets overbought, or can sell off before it gets oversold. So this is really just telling you that there's plenty of room to run on both sides if and when the market decides to either make that run up and or lower. Want to show you the dollar. Dollar's interesting here. I do think the dollar's going to catch a bid here. And even though about a lot of people say, well, dollar should be getting clobbered. It's not. I think it's a flight to safety, to be honest with you. And I think that flight to safety eventually will turn into, a correlated pair of equities and the dollar. I think in 2014. I don't think now, but I do think in 2014 you'll get the dollar start to rally with equities. And relationships do change. Okay, right now it's inversely correlated, so I do think that flight to safety. I don't think gold will be it. I've mentioned that many times. Gold is a short into that area, 1416, 1420, and that would be the higher zone, and the lower part of the zone would be 1316, 1380, if we can get back up there. So I wouldn't touch gold in that area, but that's something that we would look at, and then obviously the dollar would look to start to make a run up in here. Now, crude oil, still get a lot of emails. Hey, what do you think about crude? Like I said yesterday and the day before, I wouldn't touch it right now. We did get that little pop up into that area. Usually when we come back down and touch it, that's the reason why I liked it last week. Don't like it at all. I think now we're going to probably test the $98 area. And, even if you look at it as some sort of a head and shoulders, if you want to call it, big head here, left shoulder, lower right shoulder, which is what you want to see, neckline being broken. I just don't like crude. I do think crude does rally, and it will rally, but I would look to buy, out of the money calls, maybe January's, December's, even going into the first quarter of next year. But we do get that cycle where oil starts to rally going into the holidays, and then kind of dwindles down into January and all of the winter months, and then starts to pick up again around end of April, May, going into the driving season. So I think you're going to have a little more time. Let it break down here, and then look to pick oil up at least the first touch of the 200-day moving average. Now, if it breaks here, then I think it's in trouble. And also what this does here, puts a bid into the transportation sector, which also helps equities as well. So we'll just keep an eye on this closely here. So it's a two-sided street here. You say, well, demand is dropping, nobody's shopping, so you got to see how oil, how the market participants actually look at oil. So it's always it's either this side or it's that side. Too high a price of oil is no good, but yet if we're back up into this area here, there's a demand for oil, meaning people are going out and spending money. So there's an argument for oil, but to me, oil is always a better buy than a short, only because you never know what happens out in the Middle East. So you don't want to be waking up next morning and you have oil up $4 when you're looking to get when you were short the night before. Okay, so let's go right into the chart. Just wanted to show you. Here's what the day traders are dealing with. With the the debacle out in Congress. They come in, they sell. There's nothing going on here yesterday morning. All of a sudden, they start talking about how there's a possible deal. They rally them up. Now, there's a 5-minute chart, mind you. Boom, we ran back up again. Quiet period going into the end of the day, and sure enough, Reid said that there's deals off the table. They sold them off hard, and then another congressional leader said that we're going to be in talks into the night, and they rallied them and again sold them off again. So this is trying to establish a position to look for a trend. This is no trend. This is just chop, and this is where it really could be detrimental to your account. So what I'm saying is that the new traders that are new to this game, I would just stay aside for today, tomorrow, see what happens to get some sort of resolution out of Congress, and let the markets get back to being what the markets are, free markets supposedly. But when you have this chop like this, it's very difficult to establish a long and or a short position for that matter. So as you can see here, just a bunch of chop here. Really not good trading yesterday if you were looking to get some sort of trade off. And I personally like to get some sort of a trade on a catalyst, whether it be an upgrade or downgrade, some sort of report coming out on the stock, the sector, because if you're just looking at the markets, look at this, just absolutely terrible trading. Okay, so we are inside day from the previous day, okay, which is fine. We had a shallow pullback, again, still bullish, but we want to see where this goes. Now, we don't want to be breaking a 20-day moving average and get down to the 50. And although that would be the line in the sand, if that broke, then we'd be testing these fib clusters again. And that's not what you want to see, because if we start to roll back down again and we fill this gap, we could really flush down to the second fib cluster, if not the 200-day moving average. That's not what we want to see. So a little pullback here, kind of digesting this big move up from last Wednesday. No problem, and then the market needs to start moving again. Okay, so that's something that we're going to be watching very closely the next couple of days. Here's the IWM. Obviously, one of the strongest indexes that we follow, one of our leaders, acting fantastic, inside day to the previous day. That's the theme this morning. However, we want to see a shallow pullback, holding a 20 again, like the spiders, and then a big move up, taking out the highs. That will definitely put a bid into this market. Diamonds, not so great. Again, the weakest of the five indexes that we follow. Again, broke down below the 20, holding by a thread to 50. So the Dow Jones, I think Dow will take a big, if this market does roll over, I think the Dow, you'll probably see this fib cluster get tested again at 149.77. Again, let's watch it. Let's see what happens. But Dow is the weakest of the five here. Had a big oversold bounce, and I think that's really all it is, an oversold bounce. Really couldn't get much, and you can see here the Dow definitely closed lower out of all of the five that we follow. Transports held up really well. What can you say about that? Inside day, we did try to take out the highs. We did, but we didn't close. We closed right at the previous day's high. Okay, not bad, and I still like to see this hold up well. One of the leader, actually, of the five that we follow. And here's the XLF. Here's the concern here. The banks did well the last 3 days, and then right now it is, and nothing wrong with yesterday's price action. We have an inside day, holding above the 20, holding above the 50. But we want the leaders, the J.P. Morgans, the Wells Fargo, the Goldmans. We want them to really start taking a role here. As you can see, we hit almost 160 and we failed, and then we failed miserably to close at the low of the previous day. So that is not what I'd like to see. I'd like to see Goldman really starting to take shape here and start breaking out. Now, to me, Goldman is still okay if you're looking to try to take a long position, but I think below 156.30, you got to cut them, only because that it's now we're going to break this low and we're going to take this gap area of support. And if that happens, more than likely you'll test the lows, and if not, the 200-day moving average. So we do not want Goldman to really sell off any more than what it should be. Okay, so that's something that's a concern to me. Now, Apple took out that 497-ish area, as you can see here, yesterday. Not a lot of oomph to the upside, but again, I'll take it. We have the MACDs kind of rolling to the upside. We're not quite overbought in our stochastic, so we do have room to take the next target of 505. If you took it long, your stop's going to be at least 489, 490. And even if you had a little bit more room, I'd really take it under probably about 484, 485, and then move your stops accordingly. And lastly is the Qs. And the Qs are actually doing fantastic. Tech is doing well. Networking, semis, and and the semiconductors, like I mentioned before, and networking is doing really well. The chip sector's okay. Intel, again, traded in line with their earnings. So not bad, not good, but you know what? We'll take it. And this is exactly what we want to see, but we like to see the banks and financials start to catch a bid here. I think that the next pullback should be bought, but we'll see how deep the pullback is. Remember, if you looked at the spiders, we're making higher highs and higher lows, which is fine. We don't want to see we don't want to see starting to take out this low here. As you can see, higher low from this previous low here and here. Okay, so we have the June 24th low, we have the August 28th low, and then we have the October 9th low. So this is fine. Okay, you could even draw a trend line here, but this is what I don't want to see. Is I don't want us to start breaking this area, this trend line here, from this to here. Okay, we're still making higher lows, but if we start to break down and we really start to take out this low, which is going to be the pivotal low here, the October 9th low, then I think all bets are off to the upside for at least a little while. And we'll just, again, take it one step at a time, guys. But let's get this uncertainty out of the way with Congress, when the debt ceiling, and then let's see where the market goes. We're coming out of seasonal weakness, okay? So the next couple of weeks, and maybe another week or so, but I think the end of October going into the holiday season begins some seasonal strength. So we'll see what happens. Have a great day. Be safe out there today, and we'll speak to you tomorrow.